2, 4, 5, 10, depends how many workers we are working. So that payroll records is telling us how many workers are working in this department and which worker working how many hours, regular or overtime. All right. So payroll record is basically about the all employees, all workers. All right. Employee earning records. Employee earning records is basically about the individual workers. Detailed information about the individual workers, like as the name of the worker, sex, male, female, married, unmarried, date of birth, the time, right? And regular hours, workers is working overtime, if worker is working overtime, and could be withholdings, alright, so that is the tax related, deductions, which is about the insurance, and finally net pay. So gross pay, so here is a gross, here is a withholdings, deduction, and net. So gross and net. So it's some detailed information about the worker hours. Right? So not only just worker hours, all about the workers, how much money that worker is getting. Right? The third one is the payments of net earnings. So payments of net earning is that how much money worker is earning and how much money worker is getting, because worker has to pay tax and worker has to pay for insurance. So that's the summary of the workers' payments. Right? So that's the basic things about the learning outcome 2. So we don't really go in detail. It's just the basic things, which records involved. Like as I said, 3 records involved, and the department involvement, which is a timekeeping department and payroll department. And one thing is payroll department basically send all this cost or labor cost to the treasury department. So they send it to the treasury department. The treasury department will transfer the salary to the worker in form of check. Right? Instead of cash. So that's all about the learning outcome 2. So now we move on to the learning outcome 3. So learning outcome 3 is accounting treatment for labor cost and payroll taxes. All right. So accounting treatment of labor cost and payroll taxes. So in this one, first of all, we need to understand how does the accounts work? How does we transfer the information? All right. So like as here, we have a raw material account. All right. We have a payroll account. Right. We have, let's say, work in process account. We have a finished goods account. And then we have a cost of goods sold. Alright. So, in raw material, we have a material purchase. Alright. So we have a direct material and we have a indirect material. One more account I forgot to write here is manufacturing overhead account. Right. So we have a direct material. Direct material will directly transfer to the working process here. Alright, direct material cost. That same like as we did the journal entries and the accounts in our topic 2. Right? And indirect material will transfer to the manufacturing overhead. Right? Labor. We have direct labor and indirect labor. Like as I give example before, $75 is indirect, direct, and $5 is indirect because inefficient. So that is the indirect labor. Right. So direct labor directly transfer. Right. Indirect labor transfer to the manufacturing overhead. So probably we have some other indirect cost. So anyway, so we got the total here. Right? And this total now will transfer to the manufacturing overheads. So this is your manufacturing overhead. Alright? So we got the total cost here. Alright? And that will transfer to the finished goods. Alright? And finished good transfer to the cost of goods sold. And cost of goods sold may be transferred to the income statement. So that is the basically very basic things. Alright, so keep in your mind, indirect labor will transfer to manufacturing overheads and direct labor will transfer to the working process first. Alright. So that's the basic accounting treatment. Alright, so now we focus on the direct labor and indirect labor because materials belongs to last lecture that we already covered and overheads is the next lecture next week. Okay. Okay, so here we can start with the labor time records. Alright, in this labor time records, as I explained you before, we have mainly two kinds of cost, which is direct labor, indirect labor. Alright. Indirect labor will transfer to the manufacturing overhead. Right? And direct labor is your job cost. Alright. So we got direct and indirect. So in that direct, indirect, this is the summary. Alright. In this summary, we're gonna have a journal entry and we have a T account. Right? So the journal entry is same like as the learning outcome learning outcome 1 when I explain you about hour rate, piece rate and modified wage plan. In modified wage plan, I give example of direct and indirect. Right? So the journal entry could be working process, debit and credit job cost. And debit, working process, credit, manufacturing, overhead. So you can combine this journal entry in one journal entry that I explained before. So debit, working process, credit, job cost or direct labor cost, and credit, manufacturing overheads. So manufacturing overheads come from indirect labor. Alright? So the transaction, the T accounts informations that I just explained you by writing the T accounts. Alright, so direct cost will directly transfer to the working process, indirect labor cost will transfer to the manufacturing overheads, and then we have a total manufacturing overhead, and then that will transfer to the working process. Alright. So that is a basically very basic accounting treatment or the accounting treatment related to the labor cost. All right. Okay. So now we move on to the next topic of learning outcome 3, which is overtime. All right. Overtime means when worker working extra than regular hours. All right. Working extra than regular hours. So that's called the overtime. So if workers are working overtime, company has to pay extra money to the worker. All right. So here, overtime basically have two types of calculations of the overtime. So the first one is overtime pay. All right. And another one is overtime premium. All right. Overtime pay means when worker are working extra but with a regular labor rate. Extra hours with regular labor rate. That's called the overtime pay. All right. So it's a extra hours with regular labor rate. Extra hours with regular labor rate, it's called the overtime pay. All right. Overtime premium means extra hours with extra labor rate. All right. Extra hours multiplied by extra labor rate. So this extra labor rate called overtime